Welcome to the Explainer. Today we've got a real tale of two tickers for you, Energy versus Centrus Energy. Think of it as a classic David versus Goliath showdown in the energy sector. We're going to dig into the numbers and see what story they tell.
So, here's how we'll break it down. We'll start with a quick intro to both, then look at their size and stock performance. After that, we'll check out their financial health, see how profitable they really are, and then wrap it all up with the final pros and cons.
All right, Section 1, let's get these two energy stocks compared. Time to set the stage for our financial face-off.
So, in one corner you've got Energy Inc., that's ticker URG, and in the other corner we have Centrus Energy Corp., ticker LEU. Two companies, two very different approaches, as you're about to find out. Okay, let's jump into Section 2, size and stock performance. This is all about first impressions, you know? What do the big, obvious numbers tell us right out of the gate? And whoa, right away, Centrus Energy comes out swinging. We're talking a market cap of $3.7 billion. That is a heavyweight number, no doubt about it. And then you have Uranium. Its market cap is sitting around $501 million. So let's put that in perspective. It's way, way smaller. We're not even in the same ballpark here. Yeah, so there it is, a classic David versus Goliath situation. And this size difference, it's not just a fun fact. It's really the key to understanding everything else we're about to look at, from their finances to their risk profile.
And you can often see this size difference play out in stock performance. If you look at how they've done since the beginning of 2025, Centrus Energy has just pulled way ahead, leaving Uranium trailing behind.
All right, moving on to Section 3. Let's take a look at their financial health. You know, size is one thing, but what's going on under the hood? We're comparing their fundamental assets and liabilities. So before we dive into the numbers, what do we even mean by financial health? It's pretty simple, actually. It's like a checkup. You're just balancing what a company owns, its assets, against what it owes, its liabilities. That's it. And wow, just look at this chart. It really tells the story, doesn't it? The difference in scale is massive. Look at the assets for LEU compared to URG, and then look at the liabilities. Centrus is just playing in a totally different league. So here's the main takeaway on their financial health. Centrus has way more assets, which is great, but it also has way more liabilities, more debt. Energy, being smaller, has fewer assets but also carries a much lighter load of liabilities. It's a classic trade-off.
Okay, on to Section 4. Let's talk about profitability. At the end of the day, are these companies actually making money? Are they running a lean, mean, profitable machine?
Now, a great way to measure this is by using something called EBITDA. I know, it's a bit of an alphabet soup. Earnings before interest, taxes, depreciation, and amortization. But all you need to know is that it's a really popular way to get a clean look at how profitable a company's core business really is without all the accounting noise.
And when you look at the profitability metrics, there's a clear winner here. Centrus Energy is just generating more profit. It has a higher EBITDA, higher operating income, and, this is a big one, higher free cash flow. That's the actual cash it has left over after running the business.
Okay, let's switch gears for a second and talk about something called free float. This is a really interesting one. It basically tells us how many of a company's shares are out there on the open market for people like you and me to trade. It's a big deal.
And check this out, Energy's free float is a whopping 98.37%. That means almost all of its shares are available to the public. It's not locked down by insiders or huge institutions.
Now, Centrus also has a really high free float at over 95%, but you'll notice it's a little lower. That means a slightly bigger chunk of its shares are closely held, probably by insiders or big institutional players. All right, Section 5. We've looked at size, health, and profits. Now it's time for the final scorecard. Let's pull this all together and look at the pros and cons for each company. And here it is, all laid out. On one side, you have Uranium. The pros, that's super high free float and lower debt. The cons, well, it's just smaller and less profitable right now. Then you have Centrus. The pros are obvious, bigger, more profitable, great cash flow. But the con is that it's carrying a lot more debt.
So it really boils down to this. You've got one company offering more shares to the public and less debt, and the other offering massive scale and proven profitability. It's a fascinating contrast, showing two totally different ways to operate in the energy space.
And that leaves us with a big question, doesn't it? Which story is more compelling for the future? Do you go for the smaller player with less risk and more public access? Or do you bet on the established giant with more stability and profit? Understanding these kinds of trade-offs, that's what makes this all so interesting. It really gets you thinking.